Federal Drive is presented by GEHA, Government Employees Health Association, proudly providing health and dental benefits to federal employees and their families. Visit GEHA.com.
And now, the Federal Drive with Terry Gerton, sponsored by GEHA.
Welcome to the Federal Drive on Federal News Network. It's Thursday, April 2nd. I'm your host, Terry Gerton, and I'm glad you're here. Coming up on this hour of the Federal Drive, shutdowns don't just disrupt agencies, they disrupt household finances, and the data shows it almost immediately. Plus, a large TSP balance is a success story until required minimum distributions turn it into a tax problem. Those stories and more ahead during this hour of the Federal Drive. We begin with this. As Army civilians who have been identified as surplus begin receiving automated notices giving them a few days to decide whether to accept a reassignment, retire early, or opt in for a buyout, many are making these life-altering decisions with limited information. Here with an update to her story from Monday is Federal News Network's Anastasia Obis. Anastasia, thanks for joining me.
Hi, Terry.
You've been hearing from civilians who've received these notices. What are they saying?
Yeah, so civilians first got this message to the force saying that the goal is to strategically reassign employees to vacant positions across the Army, not to conduct a reduction in force. And we know that, we talked about it recently. The message said that the leadership will provide support options for this transition, including early retirement and buyouts, and they will reimburse expenses if people have to move to a different location. And while employees can submit a hardship claim for consideration, declining a valid management-directed reassignment, as they call it, will result in termination from federal service. So those who have been identified as surplus have been getting these automated notices saying, hey, you're surplus and you will receive a reassignment. Also, you have these buyout or early retirement options. However, those notices do not confirm employees' eligibility, leaving many to figure out what it is that they're qualified for and what it is that they might receive in the end.
If an employee is thinking about accepting a buyout, what should they consider before taking it?
Yeah, so first, in terms of who's eligible for this they call it voluntary separation incentive payment. Permanent federal employees who have been employed for 3 years may be eligible for a buyout, but there are multiple caveats. If they have recently received incentives such as student loan repayments, recruitment or relocation bonuses, they're not eligible for a buyout, and there are more criteria. If you're eligible, however, financial advisors say that it's very important to remember that buyouts are paid out as a lump sum, so they're subject to income taxes, which means that roughly 20% of the payment will be lost to taxes. So since it's a lump sum, there is no more income coming in. So it's important to calculate how long that post-tax lump sum will last you. They also need to make sure that they have a full copy of their electronic official personnel file on a non-work device for various reasons, but one reason being if civilians who have more than 5 years of service, they will be eligible for pension later, and they will go through that process, to apply. When they're going through that process of applying for that, they will have all that paperwork ready to go. Experts also recommend leaving their retirement contributions in the system, even though it might be tempting to take it out, especially given these circumstances. But if you leave your contributions in, you can come back later and claim your pension when you're eligible. And just one more thing that I'll mention is a buyout comes with a 5-year restriction. So if you decide to go back and work for federal government within that time period, you will have to pay that money back.
That's really important advice. What about for folks who are thinking about early retirement? Who's in the best position to take the voluntary early retirement?
I mean, no matter what, it's a tough decision to be out of a job when that wasn't exactly your plan. But employees who were already thinking about retirement, they meet eligibility requirements, which is minimum age, it's 57. Those people are better positioned to take the offer, even if the timing is a little earlier than they expected. It's not ideal, but at least they know this is an option for them. Now, for those employees who are eligible for early retirement, and those would be employees of any age with 25 years of service, or those at least 50 with 20 or more years of service. It's a difficult spot to be in. Depending on your age, you still have maybe up to 20 years of work in you left. And, somebody with 2 decades of service hasn't had the time under their belt to grow their TSP account. They're probably going to get maybe 1/4 of their salary at best. So consider insurance and other deductions. You're looking maybe at $1,000 a month. And of course, that's not enough. So the first step would be getting some education on retirement planning, because many have probably never attended kind of pre-retirement classes or know how to calculate their benefits. And then another tip is to have a plan to manage inflation. But the good news is that if you've had your federal health insurance for 5 years, you will be able to keep it. So you're one step ahead, meaning that gives you some breathing room if you want to maybe go and work for a small business, or maybe you want to start something of your own. That just gives you a little bit of freedom.
Anastasia, there's still a lot of uncertainty facing these employees. What are the biggest questions they're still asking, and is there any more information coming in their direction?
Yeah, I mean, there are many things. Civilians say that, we talked about it, but civilians say that, they've gone through 2 rounds of DRP. They've gone through probationary workers being fired, a shutdown. And so they finally felt like things are slowing down and they can start doing their job. And now they feel like they're being hit with this rebalancing effort. Many civilians who have reached out to me said that they're not interested in, or they're just not able to move locations. A lot of them are not interested in a buyout either. So the question remains, what happens to people in those positions? What happens to people in positions who don't have a match? If the Army doesn't have a match for them, the Army says that they're avoiding a reduction in force, and they will do everything, to find people vacant roles. But at the same time, what if they don't? Will those workers be terminated? And that sounds like a reduction in force.
That's Federal News Network's Anastasia Obis. Thanks for keeping us posted.
Thank you, Terry.
You can find her full story at federalnewsnetwork.com. Up next, shutdowns don't just disrupt agencies, they disrupt household finances, and the data shows it almost immediately. This is the Federal Drive with Terry Gerton on Federal News Network. Welcome back to the Federal Drive with Terry Gerton on Federal News Network. Federal employees may eventually be made whole after a shutdown, but the timing matters. After the most recent missed paycheck, data from USAA shows requests for financial relief spiking among federal workers, highlighting short-term cash flow pressures even when back pay is expected. We'll walk through what those patterns reveal about how workers navigate fixed bills and uncertainty with Daniel Diaz, spokesperson for USAA Bank. Daniel, it's great to have you on the show. Thanks for being here.
Thank you, Terry. Happy to be here.
In addition to the longest ever federal government lapse last October and November, the Department of Homeland Security has experienced its own partial shutdown for even longer. What have you seen change in the request for assistance at USAA Bank from your members?
USAA Bank, stands ready to serve members in the event of government shutdowns. We have done so for the last 10 years. As you noted, that October-November shutdown, we did issue over $450 million in relief to military service members and federal employees. The shutdown, we know it's different. It's a little bit more limited in scope, but our approach and the need has been exactly the same. So what does that mean? It means that we've gone out to members early, so that as soon as the government shut down on February 14th, a lot of these members, federal employees who have experienced shutdowns or near shutdowns in the past, knew when they were eligible and ready to apply for payment assistance. When those doors open, we did see activity come in, and as each missed pay period has come in, we have seen a bit of a bump each time. As the shutdown continues, our members know that they can look to us to keep communicating updates about the program and letting them know what we have on offer so that they can continue to have peace of mind and do what they do best.
How long does it typically take for USAA to start receiving these requests? We're not inexperienced with shutdowns anymore. Do folks reach out right away, or does the demand tend to build over time?
Well, it comes down to readiness, right? So, we want our members to know that they're going to be taken care of well before that first missed pay period. So as soon as we know, we get the word out early on multiple channels, and we typically see demand start to move as soon as that first window opens, which it opens typically a couple of days before the missed pay period. We're able to process these applications very, very quickly so that when the pay comes, if pay is missed, our zero interest pay loans are there to help fill any gaps and ensure that day-to-day needs that continue to be met. That program continues to stay open throughout the shutdown itself, so that maybe if someone decides later on that it's time for them to go and ask for some payment assistance, we are there to serve them.
In the current situation with Department of Homeland Security, USAA Bank says it has provided more than $12 million in relief. What does that number represent in practical terms? Like how many members, what kind of short-term needs are showing up?
So as of this morning, we have provided over $14 million in financial relief, having served thousands of members. And just in terms of what those numbers mean and the needs that we're serving, this is designed to ensure continuity in day-to-day finances. The zero interest pay loan, for example, it's meant to be that stopgap for everyday needs, right? Ensure that people can continue paying their mortgages, their rent, being able to put food on the table. The payment relief or the payment extensions that we offer, that gives an opportunity for impacted eligible members to be able to redeploy cash to other needs, maybe not worry about impending due dates, deadlines. Ultimately, our members count on us to provide financial security, and we're here and we're happy to serve them.
We hear a lot about TSA agents. They're not the most highly paid folks on the federal roster. We have Coast Guard civilians that are affected by this, FEMA folks, but people who don't experience this personally may say, well, they're all going to get back pay. What's the big deal? Talk to us about the difference between making the day-to-day ends meet for these folks who haven't received a paycheck in a while and the resources that USAA provides.
So one of the things that we emphasize to all impacted federal employees is to be early and to be proactive, right? Many institutions, not just your bank, but utility providers, lenders, and others are willing to be flexible with federal employees or others, or others experiencing hardship. It's important to be proactive, reach out early. Taking a step back and looking what we do, having those day-to-day needs met ensures that federal employees, military service members, Coast Guard, anyone who's impacted can have that peace of mind that their day-to-day needs are being met. The economy rolls on, life goes on. There are still bills that need to be paid, food that needs to be put on the table, kids that need to eat. And this is why financial assistance is really, really important. Again, these people do some of the most important jobs out there. They go out of their way to serve us. Being able to be ready, stand ready to serve them, it's the least that we or any other organization serving them can do.
I'm speaking with Daniel Diaz. He's spokesperson for USAA Bank. Daniel, let's come back to talking about the folks that you've seen actually submit requests. What are you seeing in terms of the demographics? Are they distributed across the country? Are they focused in a particular workspace? What are you seeing there?
So I don't have that breakdown in front of me, but I can tell you that demand is coming from across the entire spectrum of income levels, jobs. And the reason for that is that financial security, it's universal. We hear our members when they talk to us on the phones, when we're able to give them the support, telling us that they can breathe a sigh of relief. And that's important. This is why we do what we do.
When members ask for financial assistance, what are the options that they're choosing most frequently?
So I would say that the demand tends to be highest for our zero interest pay loans. And one thing that it's important to note is that these aren't paid advances. So they're not clawed back as soon as the back pay is paid. We know that, again, maybe not having been paid for a month, 2 months, and then having to catch up, it can take time. So what we do instead is we give people 60 to 90 days so that our impacted members can have a smoother on-ramp back to, their day-to-day financial life. After that, payment relief, having some extension on due dates is popular. And again, that's to be able to free up cash flow for other more immediate needs and give impacted federal employees and their families a little bit more flexibility.
USAA Bank also offers financial advice in addition to financial services. What sort of questions are you getting most often from your members as they try to navigate a federal shutdown?
So in the run-up and the start of a shutdown, the questions that we get are, where can I turn to for support? How am I able to access your assistance? The deeper that we get into a shutdown, people start to ask questions around from advice. So where can I continue to pare back, reduce costs, spending? If I have extra pools of money, where should I pull from first? Which we often advise, pull from your savings before your 401k or any retirement accounts. And the question that we also get is, can I continue to count on you? It's been 4, 5, 6 weeks. Are you still going to be here when I need it? The answer is yes.
Even given the current situation, our political system shows no signs of being able to navigate future funding challenges without shutdowns. I'm curious, as you've watched the last few of these from USAA Bank, are you seeing changes in how federal workers are preparing for the eventuality, maybe even the certainty of future shutdowns?
So there's definitely much more of an emphasis of planning ahead. So we are advising members, and we see some action there of getting your savings in order, having that 3 to 6 months of expenses set aside. Our members now know the importance of reaching out to us and reaching out to other institutions early to be able to know what relief is on offer and plan for that. Having that awareness and planning is key. And I think that's what's been meaningful for our members in this shutdown, because chances are they've come to us in previous shutdowns. They knew that they could count on us to provide the same support. We think that this is an opportunity for anyone who's impacted to examine their support system, see who's around them, even re-examine some of their banking relationships so that they can be best prepared for any possible interruptions in the future. Life happens, things are unexpected. Ultimately, it's important to have people and institutions who will be by your side.
I've been speaking with Daniel Diaz. He's spokesperson for USAA Bank. Thanks so much for joining me today.
My pleasure.
We'll post this interview at federalnewsnetwork.com/Federal Drive. Subscribe to the Federal Drive wherever you get your podcasts. Still to come, a military family's decades-long journey with autism is now helping other families navigate a system that often feels impossible to change. But first, a large TSP balance is a success story until required minimum distributions turn it into a tax problem. You're listening to the Federal Drive with Terry Gerton on Federal News Network. Welcome back to the Federal Drive with Terry Gerton on Federal News Network. Federal employees often retire with two advantages many Americans don't have: a steady pension and a sizable TSP. But when required minimum distributions kick in, those income streams can collide, triggering higher taxes and unexpected ripple effects. We'll look at how that happens and why planning years ahead can change the outcome with Tiago Glieger of RMG Advisors. Tiago, thank you for joining me.
Thanks, Terry.
We have an interesting topic today, required minimum distributions, or RMDs. It's really important to a lot of people. Start us off with that definition first.
Yeah, Terry, required minimum distributions, people tend to not worry too much about it because they know it's something that is later in retirement, usually 73, 75 years old, depending on when you were born, is when RMDs start. So people come up to retirement, especially early feds at MRA, and they're thinking, I've got 20 years almost before I need to worry about this. What do I need to think about it for now? And so the RMD stands for required minimum distribution. And the challenge with that is that there's a minimum amount of money that has to come out of your portfolio at some point. And usually that's by the time that you already have a fully taxable pension. Your Social Security is already turned on in most cases by that point. Actually, in pretty much all cases, nobody defers past 70, right? So now you've got all this taxable income, and now the tax law says you got to start making these minimum distributions, which just add to your tax. So tax on tax on tax is the problem we're trying to solve for here. And it catches people by surprise by the time they get into their 70s.
So this is both a lifetime tax issue and a legacy planning issue then.
That's right. I think when RMDs are in our lifetime, they can be pretty manageable. But recently, within the last 5-6 years, there was a law change that said new people that are non-spouses, so any of your kids, inheriting money that's inside a pre-tax account, you don't have the same amount of time that you used to have before to completely distribute the account. The new rule says now you have to take it out, in most cases, within 10 years. And so thinking about a shorter timeline, you have a taxable account. Now you have a shorter timeline that you have to deplete that account to zero. That means you got to take bigger chunks out of it. And never mind if the market keeps increasing that account balance, because the markets keep growing over time, you keep having to take more and more and more out in bigger chunks, and bigger chunks equals more taxable income. And again, before you know it, you're facing this big tax bomb, and you could have done something about it way sooner if you had the chance.
It seems like a lot of feds see a large TSP balance as a success story, and it is, but then it can actually turn into a long-term tax penalty. Walk us through how that math works.
Yeah, and you're absolutely right. Having a big savings account, an investment account, can be financially freeing to people. It buys a lot of financial independence. But if we think about the traditional wisdom in financial planning and wealth management is defer your taxes. Why pay tax today when you can pay tax tomorrow? This is something that's very common as knowledge. And so as those accounts get bigger and bigger and bigger, the minimum amounts of money that have to come out also get bigger. And if none of those dollars have been taxed yet, that means every dollar you pull out, it's like you're creating your own salary again. And so a $500,000 TSP account, all pre-tax, how much of that is your money compared to how much of that belongs to the IRS and your state comptroller as taxes? Now look at $1 million account, look at a $2 million account. How much more tax do those people really are going to have to owe in their lifetime? And so that's where you start to introduce new problems, first world problems, let's be real, right? But problems nonetheless, because your tax bill just continues to get bigger and bigger. And as you get through larger and larger income brackets, now more of that money is being taxed as well. And it becomes out of control really quickly.
So that's what you referred to a minute ago as the tax bomb. Is there a way that people can plan now to keep this from becoming a problem?
Yes. As long as you are not looking at large R&Ds a couple of years away, there's a lot that you can do in what I call your tax planning window. So if you think about what happens to the income trajectory, as somebody is working, usually people earn more and more and more and more. And by the time they retire, they usually are in their highest earning years. Then they retire and their income goes to nothing until their pension kicks in, and then it's a smaller amount of their salary. And unless they're withdrawing from their portfolio in pre-tax accounts, that's their taxable income. Then Social Security kicks in, but truthfully, it's not nearly as high as what they likely earned when they were working. Eventually, their RMDs mean they have to pull out enough that it does increase their bracket again. But if you think when they retire all the way through when RMDs start, you have low income years for 10, 15 years where you can do things like Roth conversions and say, okay, if I'm going to be required to take it out at the 22 or 24% bracket later in my lifetime, maybe I have an opportunity to take it out at the 12% bracket today. And you can save yourself a lot of tax by doing that conversion now, thinking about how much do I want to take? If you're not going to convert, maybe just take a little bit more because you have a little extra room in your tax bracket today, where in the future, the expected R&D is going to be higher.
I'm speaking with certified financial planner Tiago Glieger of RMG Advisors. Tiago, talk a little bit more about that tax planning window for federal employees. How do people know they're in it?
The way to know that you are approaching the tax planning window is to look at what your expected taxable income is going to be for the year. Okay, so if you're leaving federal service and you're not working anywhere else, your bracket, your taxable income is probably very low. Now you need to live, right? And so we still have expenses. So how much are you going to pull out of your TSP account and your other accounts that you have? And is that more taxable income than you were earning as a salary? If the answer is no, it's not, it's less taxable income, then that usually means it's a good idea to start thinking about a Roth conversion. Because if you just don't use the money, you just leave it growing and growing, eventually you run into that required minimum problem, and now your taxes all the way back up again. So that window after you retire and leave federal service, if you go to work for another job, depends on how much you're earning, right? If you're earning the same thing as you were in federal service, okay, that window is not yet started.
RMDs don't just affect taxes, though. As you're talking about raising your income level by pulling this money out of your TSP, they can also change how much your Social Security is taxed and what you pay for Medicare. Help us understand those implications.
Yeah, that's a really good point, Terry. The Social Security taxation is a little different than how our W-2 wages are taxed. Some people pay 0% on Social Security. Some people pay 50% tax on Social Security. Some people pay tax on 85% of their Social Security and everywhere in between. And so the key to understanding how does your RMD affect everything else is if you are increasing your taxable income, you could be increasing it beyond a certain limit that the IRS says, okay, now we're going to tax more of your Social Security benefit. And so now it's not just more tax on the money that the RMD created, it's more tax on your Social Security benefit. And there's also a component to health insurance as well. FEHB does mean that you don't have to take Medicare Part B. You can maintain it if you're eligible in federal retirement, but still most federal retirees take Part B in retirement. That comes with a premium, and that premium is adjusted on your gross income. So the more taxable income you have, the higher your health insurance premiums are. And remember that RMDs just create more taxable income for you. So this whole thing is very interconnected in retirement.
It is pretty complex. For people who don't need that RMD income right now, what are the smartest moves and maybe the most common mistakes you've seen people make?
I think some of the smartest moves is to start sooner in determining what your expected tax bracket is going to be when you do have RMDs. Because you can start to think, okay, am I in a higher bracket today, early retirement, than I'm expected to be when those RMDs begin? And if I'm in a higher bracket then I really need to start thinking about Roth conversions today in the lower bracket that I'm in. Now, using the money you can take it out via a Roth conversion where it just becomes a Roth and then it's tax-free forever, or you can just distribute that money to yourself. But to your point, if you're not going to use it, maybe there's some philanthropy goals that you might have. For folks who are 70 and a half years old, you can send that money straight to a charity. Instead of writing a check to the charity, you can send it straight out of your IRA.
I've been speaking with certified financial planner Tiago Glieger of RMG Advisors. Tiago, thanks as always for the practical advice.
Thanks, Terry. Glad to be here.
We'll post this interview at federalnewsnetwork.com/Federal Drive. Subscribe to the Federal Drive wherever you get your podcasts. Financial planning matters over a career, but for some federal and military families, the challenge isn't just money. It's navigating multiple systems at once. Coming up next, a military family's decades-long journey with autism is now helping other families navigate a system that often feels impossible to manage. This is the Federal Drive with Terry Gerton on Federal News Network. Welcome back to the Federal Drive with Terry Gerton on Federal News Network. April is World Autism Month, and for military families, navigating autism care often means navigating multiple systems at once. Jamie and Tracy Parent have spent more than 30 years raising an autistic child while moving through diagnosis, deployments, school changes, and the maze of military and civilian support programs. Their new book, The Mission at Home, turns that lived experience into practical guidance for families facing the same transitions and gaps in care. We'll hear from Jamie and Tracy about what they've learned and what still needs to change. Jamie and Tracy, it's so nice to have you on the show. Thank you for joining me.
Thank you for having us, Terry.
Jamie, you all have got a new book out that shares a very personal family story about your son Brian's autism diagnosis back in 1988 and how that has shaped your family's experience since then. When you look back at those early years, what stands out most for you about how your family learned to navigate autism within the realities of military life, which is challenging on its own?
Well, back in 1988, when Brian was diagnosed at age 2, there was very little information, public or clinical or educational information about autism. So we basically started at ground zero. And over the early years, while Brian was being diagnosed, we ran into a number of clinicians and educators that also didn't know anything about autism. So we had to learn a lot of grassroots things. We had to go to some little education resources we had. But the thing that really helped us the most was families like us. We found families that maybe had a 2-year-old, a 12-year-old, an adult perhaps living at home. And those families were really, really special and really influential in our lives. And Tracy and I made a pact. We said, you know what, when it comes time for us to give back, we're going to go back and we're going to help families the way families helped us. And that's probably the main reason for writing the book.
Tracy, let me ask you to follow up on that. How did you connect with other families who were experiencing the same situations, and what were the biggest challenges that you all found in common?
Well, the very first thing that happens is when you have to go and move, you have a quick deployment or you're being relocated, you kind of have to start over again. And I stress that the most important thing that helped me was connecting with other families. Finding those parent groups saved us. I mean, it really did, because you're very isolated and you feel alone. But when you get together with the military base, they have base spouses pages now. You can get on Facebook. But basically, those local groups of people that understand exactly what you're going through, you do not feel so alone anymore. And I will tell you that you end up bonding with these families because they understand that you have both the mission for the military and you have the mission at home. In our book, we're kind of hoping that nobody has to navigate that mission of autism by themselves. So I really think that those resources are vital for any parent that's listening out there to get together with other parents or other groups that they have for you to feel that you are supported.
Jamie, you were the military member in this family. When a military family makes a PCS move, sometimes it's easiest for the active duty service member. You just got that job and you're just going to start it again. How did you support your family through this kind of perpetual move transition process?
Well, in the book, we go into things like how to manage assignments, how to manage promotions, how to manage your military career. And we emphasize that you can have a successful military career with an autism family, as I call it. So we wanted to emphasize in the book that those types of things shouldn't prohibit you from seeking a solid military career. What I was doing to help Tracy along the line was identifying some of the programs that could help us, like TRICARE, the Exceptional Family Member Program, the Extended Care Health Option, and also the Autism Care Demonstration Project, which added additional features like beyond healthcare, like durable medical equipment, respite care, and more importantly, the ability to access applied behavioral analysis, which has been a very successful tool in helping individuals with autism.
We'll come back to those programs in a minute, but Tracy, you were the one keeping the home fires burning and navigating all of this process. What do people who haven't had this kind of experience really miss about what you're going through?
Well, I will tell you that everyday life, it was like being a hamster on a hamster wheel. And that's why I was glad that Jamie did go forward and check out the base or check out the services before us, because you have to deal with those day-to-day issues. And that's why it's really important to bond with other people. I know we're saying it often, and go to the military EFMP offices, the Extended Family Member Program offices, to find out where those groups were because I needed that support. And a lot of times I had to get it through a telephone call or a quick conversation because you're busy every day with working with your child when they're younger. When they go to school, you get a little bit more time. Again, then going to school, local groups, that really helped. That started to give me some sense of oneness, that there was hope. And I think that's the biggest thing. And that there was life after autism, and that I could get out there and eventually get my career back or see friends, and not be stuck doing everything myself. I think the biggest lesson I learned is that autism makes sure that you realize we are all interdependent and we all need each other. And it's not something you go alone. So with that support in place, then you can go on and you can create a life for yourself.
I'm speaking with Jamie and Tracy Parent. Jamie is a retired Air Force Lieutenant Colonel. Tracy is a neurodiverse coach and speaker. Their new book is The Mission at Home. Jamie, let me come back to you. In your last answer, you rattled off a bunch of different programs, and I want to come back to those because listeners may not be aware of all of them. There are a lot of programs, both in the military and in schools and communities that can help, but putting them all together really requires a roadmap. How does your book help families with that?
We have firsthand experiences with all of these things, and our book goes into depth about what the benefits are and how to achieve them. You're right, the military has come a long way with additional programs. These programs did not exist while we were on active duty, but now they do exist, and now they are greatly improved over time. Still a lot more work to do, but navigating those programs was kind of doing the same thing Tracy was talking about. I was looking for enlisted and officer personnel that had a child with autism, and say, hey, what happened to you? How did things work out? So it's a combination of that, I think, that helped me maneuver a successful military career. But I did need a lot of help from a lot of people to make those connections and to make things work.
As you think about the roadmap that you developed and the insights that you developed through the School of Hard Knocks, if you will, thinking about where we are today, what do you want policymakers, either in the military or in Congress or even in local communities and governments, to think about to support families like yours?
I think the biggest thing that's happened and continues to work is the EFMP program is now under the control, let's say, of the line of the Air Force. It used to be under the medical side. But putting it to the line of Air Force, I think, helped improve a lot of visibility with Congress because it is a readiness issue now. There are a number of soldiers that can get deployed to a specific area, and there's still no services there. So we still have a pretty good framework, but getting more ties between the military community and the military base, I think, would be something that senior leaders perhaps could take a harder look at, because it is a readiness issue. And like I tell people, if there's a soldier out there manning a post 3,000 miles away, he or she doesn't want to worry about little Johnny getting an appointment back home. So if we can alleviate that soldier's needs, then they can better perform their duties far away from home.
I've been speaking with Jamie and Tracy Parent. Jamie is a retired Air Force Lieutenant Colonel. Tracy is a neurodiverse coach and speaker. Their new book is The Mission at Home. Thank you both for joining us and sharing your story.
Thank you.
We'll post this interview at federalnewsnetwork.com/Federal Drive. Subscribe to the Federal Drive wherever you get your podcasts. The Federal Drive with Terry Gerton is produced by Eric White and Michelle Sandiford. Our web editor is Stephanie Wright. For the latest updates, stay with federalnewsnetwork.com or follow us on Facebook, YouTube, and LinkedIn. Up next, the top national headlines from CBS News and the Federal Newscast. I'm Terry Gerton. Thanks for listening.
And now, The Federal Drive with Terry Gerton. sponsored by GEHA.
Welcome to the Federal Drive on Federal News Network. It's Thursday, April 2nd. I'm your host, Terry Gerton, and I'm glad you're here. Coming up on this hour of the Federal Drive, shutdowns don't just disrupt agencies, they disrupt household finances, and the data shows it almost immediately. Plus, a large TSP balance is a success story until required minimum distributions turn it into a tax problem. Those stories and more ahead during this hour of the Federal Drive. We begin with this. Transportation Security Administration employees are seeing their first paychecks in more than a month. TSA agents are being paid this week despite lawmakers failing to come to an agreement on a Department of Homeland Security spending bill. That means thousands more DHS staff are continuing to work without pay. For more details, Federal News Network's Justin Doubleday joins me now. Justin, thanks for being here.
Good to be here, Terry.
Walk us through this dichotomy at TSA. Who's seeing paychecks and who is not?
Well, most TSA employees should have received a retroactive paycheck featuring at least 2 full paychecks that they missed during this ongoing shutdown that has now lasted about 46 days. There is a small population that might have seen a delay in those paychecks due to financial institution processing times or issues with direct deposit. That comes from Department of Homeland Security headquarters. And DHS says it's also working aggressively with the Agriculture Department's National Finance Center to process the half paycheck that TSA employees missed on the front end of the shutdown. And so all that's set to say that TSA employees received a substantial portion of their back pay this week. They didn't receive all of it, but DHS is working on it. And so I think you're already seeing some airports have, TSA employees showing up full time. You're not seeing the same level of call out issues that you saw maybe last week. And so clearly this is having an impact for TSA.
The executive order that the president signed directing DHS to make these payments said that they should use funding that was TSA aligned or TSA adjacent. Where is that actual money coming from?
That's the big question. There are reports from several media outlets citing senior administration officials that Trump would use money from last year's One Big Beautiful Bill Act. I mean, there is billions of dollars in spending in that bill that is a little bit more fungible than the annual appropriations that agencies normally operate off of. And you could potentially see Trump or DHS pulling from those accounts because of that issue, because, a lot of other accounts are a lot more restricted. That One Big Beautiful Bill Act did not apportion any money for things like airport security screening or TSA or anything like that. It was for border security, immigration enforcement. And so it's still an open question as to how they kind of connect those two things. But that is what Trump has directed, and that's the most likely pot of money that they would pull from. So more to come there.
And what about the longer impacts on TSA staffing? I mean, it's great that they finally got their paychecks, but this has been a pretty tough run of several months for them.
Yeah, that's right. More than 500 TSA officers quit during this recent shutdown. 1,100 employees quit during last fall's shutdown. And so there is definitely an attrition issue at TSA now over this past 6 months. There are about 47,000 transportation security officers, the folks that are on those airport screening checkpoints nationwide. But you start to see those types of numbers. And there are concerns, especially with this upcoming World Cup this summer, because now at this point in early April, TSA can't hire someone and train them in time to staff an airport checkpoint for June when the World Cup kicks off. It takes about 3 to 4 months to train a TSA officer. And so you can't backfill those positions. Acting TSA Administrator Ha Win McNeil told lawmakers last week that one thing they're trying to do is boost the numbers in their national deployment force, which can surge to different airports across the country. You saw them use that to a degree during this shutdown when there were certain airports like in Texas that saw big problems with TSA staffing. But, not everyone's going to want to join that national deployment force and kind of be pulled around. And, a lot of people are based in a certain area. So TSA is watching those attrition numbers really, really closely now because they can't afford to lose many more people before this summer's uptick in travel.
And are there employees at TSA and certainly across DHS who are continuing to work without pay through this shutdown?
Well, so TSA now should be considered exempt because they are getting paid following the president's directive. But there are still thousands of DHS employees who are not being paid. We know that, ICE and CBP law enforcement officers and some staff are being paid, but there are administrative staff at both of those agencies who are working without pay. There are about 800 employees at the Cybersecurity and Infrastructure Security Agency who are working without pay during the shutdown. There are also thousands of staff at the Federal Emergency Management Agency who are paid through annual appropriations. They are working without pay during the shutdown. And then you look at the Coast Guard. Service members are being paid in line with the Trump administration decision to pay military service members during the shutdown last fall. But there are a lot of civilians at the Coast Guard who are working without pay. So a lot of DHS staff are still being impacted by this shutdown.
And what are you hearing from those employees as far as how this shutdown has been impacting them?
Yeah, I'm hearing that, it's now the second of the month. And of course, rent is due, mortgages are due. And so there's a lot of concerns there. And folks are having to reach out to their mortgage company and talk about options for how they might deal with that. They're asking for their family members for money to help tide them over. They are continuing to show up to work because they are obviously mission-driven people. But, there's challenges even in commuting and costs in commuting, too. There has been some loosening of telework restrictions where some of these folks have been granted the ability to telework for a number of days during the week because the management is recognizing that this is a burden now to work without pay for 46 days, and any burden that they can potentially address might be worth doing at this point because this is becoming an untenable situation for some employees.
We're grateful for the partial solution here in that TSA agents are getting paid, and that seems to address the most urgent issue of airport congestion. But there's also concern that alleviating that pressure might alleviate the pressure on Congress to actually solve this problem. What are you hearing there?
Yeah, that's something a CBP employee pointed out to me, a CISA employee pointed out to me, and a FEMA employee pointed out to me. They work a little bit more behind the scenes, not as public as TSA airport screening, and that airport screening issue, and if you look at the past several shutdowns, has become a lever to kind of force Congress to take action. In this case, obviously, lawmakers could not come up with a deal as of last Friday, and Trump stepped in to take that action to pay TSA employees. But without that, I think a lot of employees are concerned that the sort of public attention on this issue will be less, and therefore pressure on lawmakers will be less to come to a deal in the near term.
That's Federal News Network's Justin Doubleday. Justin, thanks for keeping us up to date.
Thanks, Terry.
You can find his story at federalnewsnetwork.com. And up next, shutdowns don't just disrupt agencies, they disrupt household finances, and the data shows it almost immediately. This is the Federal Drive with Terry Gerton on Federal News Network.